there, this is James and you're watching Tixee Live. In today's program, I'm going to give you an update on what is happening currently in the market. And, we'll discuss a few things because there's been some interesting moves, which we'll discuss. And then at the end of the program, or near the end of the program, we will talk about, as the last day of the month, last trading day of the month, we'll discuss what a month we've had in the markets, because there's been a lot and a lot to talk about. I was just going to do a weekly, but then I thought, actually, just a weekly recap. But then I thought, there's so much more which has happened this month. Let's do that. And then after that, I'll do a look forward, take a look forward in what is happening or potentially happening next week and key events to look out for. But before we begin, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's crack on, because there's a fair bit to talk about. Right, starting off with oil. Yes, oil. Oil is set for a weekly gain. Okay. In fact, as it stands, Brent is on track to finish at a 4% weekly gain, and WTI, Western Texas Intermediate, around about 0.5% gain. Okay. Now, don't forget, oil has been pretty high over the last couple of months due to obviously current situations, but it's weighed off a little bit. But this week it's going to look like it's going to finish with a gain, close the week out with a gain. And the reason behind this is because there is concerns of economic growth slowing down. We have, on the other flip side of it, are fears about supply. Okay. In fact, US gasoline stocks fell by 482,000 barrels last week. Okay. And though there is demand concerns, there is also supply concerns, and this is propping up prices. As well as that, what you've got in hand with that as well is OPEC, who meets next week, actually, June the 2nd. The thoughts with the market in general is OPEC, Organization of Petroleum Exporting Countries, okay, is unlikely to change their last year's target. Okay. So they probably will keep the same production. They're producing at the moment 482,000 barrels a day. Okay. No, so 432,000 barrels a day. And they're likely to keep to that, despite the fact that obviously Western countries are asking them to increase their supply, because obviously if they can increase their supply, it will help with prices and inflation. But they're unlikely to change from their original plans of last year. So that is also sort of boosting oil prices slightly. And the other thing, of course, which is also driving oil as well, don't forget, is that China is beginning to come out of its lockdown. So again, there is theories about demand being increased over there. And as well as that, it's driving season in the United States. It's summertime, so people are going to be driving a lot more, apparently. And of course, there's going to be a lot more need for oil for flights and for travel, because we're entering that time of year for holidays as well. So all in all, it's keeping oil prices high. So let's have a quick look, actually, at oil. Let's pull it up on a chart and see where we are. Give me a second. Let's have a quick look at WTI first. Excuse me, bear with me, guys, and ladies, of course. Okay, so yeah, this is on a 4-hour chart. As you can see, WTI is trading currently at $113.10 a barrel. Okay, so again, we see we've had a steady uptrend from around about the 17th of May. We did drop off to low of around about $98 briefly on around about the 10th of May. But then since then, WTI has indeed bounced back. And again, it is really down to the supply issues. And like I say, OPEC as well. But you never know, OPEC might surprise us next week when they meet on the 2nd of June. But the general feeling is they won't. Let's have a quick look at Brent. Okay, Brent's the same again. Pretty much, on a very bullish direction at the moment, trading around $115.39 a barrel. So again, yes. So yeah. So we're looking at oil ending the week quite strong. Someone else or something else, it's not someone else I'm talking about, something else which is not looking to end the week in a good position, and that is US dollar. US dollar is set for the biggest weekly drop in nearly 4 months. So oil's going to potentially have a good week. US dollar's going to have a bad week. Really it's a case of that, we have got a lot of dollar weakness. And when I do my monthly recap, it was a completely different story last week. And we'll talk about that. Completely different story from the last week. Goes to show how quickly these markets can change. Oil. US dollar is set for its biggest weekly drop in nearly 4 months. And let's have a quick look again at some of the majors and see the selling pressure against the greenback. So we pick up first the British pound US dollar, which is, of course, is the cable. We've been watching that a lot, haven't we, over the last 2 weeks, when there's a lot of things have happened to it this month, but it's currently now trading against the dollar at 126.33. It broke that key level we were watching, 125.49. I think if I can remember, we were watching it for over a week. We were watching it lots. And it's currently trading above the 50, the 100 and the 200 moving average, indicating a potential uptrend on it. It has been boosted, of course, as I mentioned in my morning session, by the UK government's decision to do the windfall tax on UK energy companies or companies based in the UK, and that has boosted it. But it's also the fact that we have a weak dollar as well. That is also at the same time driving the pound higher. RSI, I've started using the RSI just to see whenever I can see if it's overbought or oversold. Don't forget, RSI is at 70, overbought, potentially could be sold off. Under 30, potentially oversold, potentially can see a buy-in. So that's it. So that's where the British pound is against the dollar. Euro, okay, the euro has dropped down under that little trend line we were watching for the last couple of sessions. It had a lot of interest there. Currently above the 100 and the 200-day moving average. RSI, I looked at the RSI when I started seeing this sell-off as well. RSI is not under the 30 or above the 70, is in the middle. So again, under the moving averages indicates maybe slightly bullish momentum on that. But so again, the euro is sort of benefiting really from a weaker dollar. I mean, the talk at the beginning of the week, remember we talked about the ECB, and we'll do that in our recap. There's so much to recap. Do that in our recap. The talk of obviously the ECB with interest rates, that's sort of not being talked about. I think really what we're seeing is moments of dollar weakness and then slight moments of strength against the euro. But that's where we are at the moment. I want to have a quick look at something else, again, to have a look at dollar weakness. This is the US dollar Swiss franc. Okay, remember we were looking at that. Again, I know a couple of weeks ago, about last week, the Swiss franc basically got boosted by the desire to be a safe haven. That's sort of slightly died down. But again, the dollar is weak against the Swiss franc at the moment as it stands, again, showing dollar weakness. If we look at the dollar yen, yes, we have, there we go. Again, 4 hours, again, we can see, yes, the dollar is also under pressure under the yen. If we even look at the loonie, where's the loonie line? Yeah, the dollar CAD, you can see it started to sell off against or lose strength against the loonie, which is the Canadian dollar as well. So yeah, overall, the week's going to be slightly disappointing for the good old greenback. And don't forget, of course, it's a long weekend coming ahead for the United States because Memorial Day on Monday, so the markets will be closed in the US. So it's going to be feeling sorry for itself potentially for about 3 days. Okay, something else I want to talk about. What else I want to talk about today? Someone's going to potentially end on a good week as well for somebody else. And that's the S&P 500. Looks set for a good ending to the week. As I mentioned in the morning session earlier on, it looks like it could close at the best level for the last 8 weeks. So that's looking good. We bring it up again. Let's bring that up on my charts again so we can have a look at it. Here we go. S&P 500. Here we go. Yeah, like I say, it's currently trading 4,086 points. So it does look set to end the week unless something drastic happens in the next couple of hours in the United States. Because the US session will be opening again in about 14 minutes. So unless something drastically happens, but yeah, it looks to end on a bullish run. I mean, and to be fair, it's not just the S&P as well. NASDAQ looks like it's going to end a good week. Dow Jones as well looks set for a good week. So really, it's it's a nice change for them because they've had a pretty torrid time over the last couple of trading weeks. Again, don't forget we talked about the main reason for this morning, but just a recap. The reason why there's slightly a bit more of a bullish momentum is because there's thoughts in the market's head that the Fed may be a little bit lighter with the interest rate decisions. So might lay up a little bit on that. And as well as that, Alibaba came in with a cracking first quarter earnings, 9% increase, which increased their stock by 12% yesterday. So the stock price. So yeah, they had a good month. So that was generally the good feeling for the markets yesterday. And it's maintained that happy thoughts for now. There is something else I want to talk about. We're talking about something good for the S&P 500. But I tell you who is beginning to feel the pressure and maybe look like, and I want to have a chat to you about what another analyst is thinking about this. And that is Bitcoin. If we bring Bitcoin up, let's have a look at Bitcoin. Where do I put it? Give me a second. Yeah, because Bitcoin has come on. Here we are. Bitcoin has come under a fair bit of selling pressure, a fair bit of pressure from the bears. Okay, if you look back, here we go. We had this big drop off beginning of May. It was trading around 37,000. It's currently trading at 29,000. And to be fair, it's not just Bitcoin. It's quite a lot of the cryptocurrencies have come under a lot of selling pressure. So yeah, it does look like a little bit of risk off because though we got risk on in the markets, like the S&P and the NASDAQ, we got risk off for Bitcoin, which does make me a little bit worried because if we got proper risk on, then the real riskier assets, of course, are cryptos. So the fact that that's under a lot of selling pressure tells me that maybe, we're not completely out of the woods yet. Maybe there is still very much a risk-off sentiment there as well. And then obviously there's a different story with other things which has happened in the crypto market over the last couple of weeks, which has really damaged the reputation and the name of said Bitcoin and things of this, for example. But I was reading an article by an analyst who 2 years ago was a real Bitcoin bull, very bullish in the Bitcoin. He says, and again, this is his opinion, nothing to do with mine. I've made an opinion on Bitcoin, to be totally open with you. His opinion is Bitcoin could drop to about 8,000, which is very, very dramatic. So again, that's just his opinion, just his opinion. Not saying that he's right, but his opinion that he was an extremely bullish individual with Bitcoin. He's now become very bearish with it. So it'll be interesting to see how Bitcoin develops over certainly next week onwards, definitely. Okay. Let's what else? How's the rest of the market, the European market, doing? Well, again, it's still not as bullish as its American cousins. It's still a little bit tepid, but it's still up. Eurostock currently trading 1.25% higher. FTSE 100 currently 0.51% higher, and DAX currently trading at 0.85% higher. So again, yeah, excuse me, there is still pretty much risk on appetite across the board at the moment. So that's quite good. Other news: we had some key economic data come out earlier on. Just need a quick swig of water. That's better. Thank you. So we had some key economic data come out about half an hour ago, or just over an hour ago now. Core PCE, month on month. Now, don't forget, core PCE stands for personal consumption expenditure. As I mentioned, it's the average amount a consumer spends per month. Okay, so month on month, it came out 0.3%. Year on year, it came out 4.9%. And it's both figures was what the market expected. Why the core PCE is looked on very favorably or very closely is because the Fed and the FOMC looks at it to engage how inflation is doing it. I know the market, a lot of us looks at the CPI, the Consumer Price Index, but the Fed pays a lot of attention on the core PCE to estimate where inflation could go. So this is why it's quite keen information. Hasn't jumped the market because it was expected. Something else which also came out around that time was personal income, and this of course is the income, the average income everybody takes home in America. From salary, bonuses, and additional income, things like that. So that came in slightly lower than expected at 0.4 versus 0.5% expected, but it wasn't dramatically lower. So that's quite interesting too. So there we go. That's how we end the week. Well, how we end the European session mainly. See what comes in the US session for the remainder of Friday. But talking of which, let's talk about this month. Like I said at the beginning, I was only going to do, really thirsty, I do apologize. I was only going to do a weekly recap because let's face it, we've had so much stuff happening this week and so many twists and turns. But I thought, no, it's the last day of the month, trading day that is. We're saying goodbye to May, and what a month May's been. Okay, let's start off with, I made a couple of notes so I don't forget it because there's so much. Excuse me. First of all, we've had two interest rate increases, both by one by the United States and one by the UK. So the Fed and the Bank of England both increased interest rates. We've had shocking inflation numbers. 9.1% in the UK, 8.3% in the United States. So we've had the market scared about inflation. Okay. And then we've had, because of that, so much talk about recession. And then we've had Twitter, the whole Twitter story. Musk pulling out of the Twitter deal because of the spam bots, the fake accounts. And Twitter absolutely, under so much pressure. We've had that. And then we've had a massive sell-off last week due to Target and Walmart not hitting their earnings, and that scared the market, no doubt. So that put a lot of pressure. So we had a big market sell-off from that, and then we had a little bit of people buying in the dips, and then we had Powell being incredibly hawkish in a speech he did last week, for example, at an event at the Wall Street Journal, which again scared the market. Was so hawkish. He was the terminator inflation, or the inflation terminator, as I call it. And that scared the market. So we had the market getting under a huge amount of pressure. And then this week, again, the beginning of this week, we had the dip buyers coming back in. So a little bit of the boost in the market with the dip buyers coming in. And then we had the Snapchat story. The Snapchat story with the CEO with that memo saying that they're going to be under their estimated target earnings, scaring the market again. And after that, because of that, we had social media stocks then under pressure. And this was because obviously the fear of the ad revenue for these social media companies were going to go down. So we had that go down. And we had that story. Then we had the ECB. ECB this week again. We had Lagarde talking about getting the ECB or getting the EU Eurozone out of negative interest rates. That boosted the euro. That was a big surprise, because weeks before that they said they weren't going to increase interest rates. They weren't worried about inflation. And then a couple of days ago, the beginning of the week, we had ECB members disagreeing on how aggressive they could be with raising rates against inflation or raising interest rates. And even some members saying that inflation wasn't a problem. Don't forget, it's about 7.4% in the Eurozone. So not as high as the US and UK, but still that's pretty high. And then we had the FOMC and the FOMC minutes, sort of giving us indication that maybe, despite what Powell said last week in his very aggressive stance, where he even said in his, don't forget, in his speech last week, he even said, prepare for pain. The FOMC minutes came out, and then we had the thought the market could, was only going to raise interest rates to 0.5. So again, that gave the market a little bit of hope, And then Thursday, we had, yesterday, of course, we had the US GDP came in worse than expected at minus 1.5%, which again sort of gave the market a little bit of jitters, not dramatically, but a little bit of jitters. And then today we had Alibaba, the magical genie of the markets, came in with better than expected earnings, which gave the market the boost. And we're ending the month, and it looks like we're ending the month, and I'm definitely ending this week a lot better off than we did end in the last week and the week before and the beginning of the week. Let's hope that the bulls can stay in the market for this remainder of the day, end May, with a bit of a boost. But what a week! I don't think I've missed anything. But what a week! What a month! Even it's been a really good month. But we've got a whole another month to come, and I hope you join me with me every twice a day to watch how more stories will develop. But starting from next week, the key events we've got: US ISM manufacturing PMI, US ADP employment change, US non-farm payroll, which is a big one, US average earnings, and US unemployment rate. Now, just to give you the heads up, I will for the US non-farm payroll, which is an average earnings and unemployment rate, which is next Friday, so a week's time for today. I will do a watch along for those events. NFP can be a big event sometimes. It's lukewarm, but I'd be more interested, especially with personal income today. I'd be more interested in seeing average earnings. How average earnings comes in. The reason why I say that, I'll end it with again a little bit of interaction of opinion. I think that what's going to start, the market's going to focus on a lot at the moment is earnings. Okay, because obviously we do have the fear of inflation, and there's no getting away from it. We've got incredibly high inflation, 9.1 in the UK, 8.3% in the United States. And the big concern is, of course, is people can't afford to buy things. And if people can't afford to buy things, then it really impacts the economy. So really, we do need to look at the earnings, the average earnings. So I'm going to be keeping a really close eye on that, and see what happens with that. So yeah, that's what we've got next week. But we've got a fun-packed month next month after we've had a fun-packed month this month. So yeah, if you ever want to ask me any questions, please feel free to do so. I am here live, so you can ask me questions. And if, all of a sudden you think of a question you want to ask me and I've gone off air, leave it in the comments, okay? I will see it and I will reply to your question live on air. In fact, like I said, there was a gentleman I noticed last week left me a comment on the YouTube. He asked me about my opinion on the non-farm payroll. And like I said, what I'll do on Thursday next week, I'll do a preview of NFP and we'll talk about what I think about the NFP. And at the same time, we'll do a watch along on Friday of the NFP. So yeah, please join me for that. Okay, well, that's there's no questions. So okay, don't forget, I'm back on next week, Monday at 8 a.m. UTC, and then obviously 1 p.m. UTC the same day. So twice a day I go online. I go live at least twice a day. European session, US session. Plus next week I will do the watch along with the NFP, and I may do a special on the non-farm payroll, like a preview before that on Thursday. So I might go online 3 times on Thursday as well. And of course, if there's any breaking news, I'll get online as soon as I can to spread the word. Now, if you're watching me on Facebook and you like it, give us a follow. If you're watching me on YouTube and you like it, subscribe, hit the notification button, so you know next time I'm about to go live. And if you enjoyed this episode and found it insightful and useful, give me one of those. Let me end the week with a smile on my face, which would be great. But anyway, on that note, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I also suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, everybody have a great weekend as well. Till next time, every single one of you, trade safe.